Hi, it's Trevor Leggett. Welcome to the Leggett Podcast. Right, hi Joe. So basically we're here today to talk about moving to France, post-Brexit, obviously, and how things have changed a little bit. But I was quite surprised the other day when I was in the UK and a couple of people said to me they didn't actually think they could move to France anymore, which I thought was a bit odd. Obviously, anyone can move to France, so we just clarify that, guys. Anyone, providing they can support themselves financially.
Well, we noticed that at the show, we were at the Place in the Sun show last weekend, and we were getting a lot of queries about can we still move to France?
Well, I say anybody, not anybody, because you can't. If you probably lived in certain places in West Africa, you might have difficulty in some places where there are places where you can't move.
From the UK, or even Americans and South Africans.
Americans, Canadians, South Africans.
Anyone that's outside of Europe, you can move here, but you need to support yourself by. Each person has to have an income of €1,270 is the amount.
Per individual
per month. Now that can be made up of a pension pot, it can be made up of an income, it can be a salary, but that's per individual what you need to show. And then what we found out since is obviously you have to get your visa before you come, your long stay visa.
You get your long stay visa.
And then once you've been in the country for 3 months, you can apply for your carte séjour, which is your residency permit.
But that takes a long time. And the funny thing is that we found that the carte vitale came through quicker than the carte séjour.
Well,
because we've been going through this obviously with my dad at the moment, and the dad he's 88 in April, so it's been quite complicated to be honest because of his the health insurance that we had to take out, which was horrendously expensive. It was $5,000 for the year, so you have that cover that covers you until you get your carte séjour. So. He came in October and we got his carte séjour from the middle of July covered, which was lucky because he had to go to hospital in July. But the thing was that the private insurance that were taken out for the 12-month period didn't cover a lot at all. It's actually pretty rubbish as a policy. I mean, any pre-existing conditions or anything related to a pre-existing condition isn't covered.
Well, the thing is, in the first year, you could still be covered by the UK.
This is what we didn't know.
Yeah.
So what we should have done.
Covered by the UK and the S1.
That's exactly right. Yeah. Now that's something you need to remember is that I didn't know that.
2 years.
And you can get the right paperwork from the UK before you leave that covers you, and then the UK pay back the French.
Yeah.
Until you get your carte vitale.
Exactly.
That's what we should have done. So. Yeah,
because you get an S1 card, it's called, and that covers you for 2 years while you move to France.
But it's not very well informed. We didn't know. And despite the fact you're looking around, I'm sure people watching or listening, really don't know. Yeah. So that S1 form, where'd you get it from?
Post office, online. You can do it online.
And also having to go to the visa application place to get the long-term visa was a bit of a long-winded affair, and they were missing the documents, so we had to go back again. So make sure you take all the documents they asked for. That was horrendous, expecting an 87-year-old to actually have to go all the way back to London. They wouldn't do it online, wouldn't do it any other way.
No, you do have to do it at the actual embassy before you come. You have to apply before you come. You can't apply for a visa once you're in France. You have to do it before you come. So that is but there are a lot of, we work with relocation experts who look after visas.
Well, my advice would be to use them, but we did have an affair with a relocation expert that turned out to be not as good as we thought. So obviously there are good and bad relocation.
Well, the ones we usually, Tracy that we use on our webinars is fantastic, and she's been here 30 years and she relocates people all the time and can give loads of advice as well, so she can tell you the amounts, what you need.
I mean, it is quite straightforward when you know what to do. So get your S1 form, apply, and be patient, I'd say, wouldn't you? Because, I mean, it's taken a long time to go through, and a French administration is known for being, slightly pedantic, and, you have to sort of tick every box, and if there's any slight thing that's wrong, they will ask you for something else, and it goes around. You mustn't get frustrated because it does eventually get there.
Yeah.
I mean, we're going to it's going to be 12 months, I'd imagine, soon. and he still hasn't got his carte séjour, but he does have his carte vitale. Now, that seems a bit odd to me. Why would you give you a carte vitale before you've got your carte séjour?
Well, it's a social security number.
Yeah, so you need that to get your carte séjour.
You need a social security number before you can get your carte séjour.
Right.
So that's why it's that way around. Once you've got your social security.
Yeah, I didn't know that either.
You need to come to the seminars.
Well, look, I'm just like everybody else watching this podcast who probably doesn't know either.
Yeah. Well, it's actually, it's not, I mean, obviously we present at the exhibition, so we have guest speakers who give out so much information, and it is on our website as well. You can find this information out on our website to do with visas, etc. But it is quite a straightforward process if you know the process. You've obviously been in France.
The process was fairly new because Brexit only happened a couple of years ago, and then we had COVID, so no one was moving. So it is fairly new, and I mean, everybody's getting used to the new post-COVID access to France.
Only British, because you've got to remember.
Well, no, the Americans are the same.
Yeah, but they've always had to get a visa.
Yeah, they're used to it.
So they're used to it. It's just the Brits that aren't used to having to go through this system. I mean, you could, before Brexit, you could just move here and you didn't have to show anything. And you didn't have to show an income or anything. You could
and of course, you could come here looking for work before. You could come here without having to prove that you've got income. You could have free movement, which we had, and we had free trade. But
the other problem you have with with Brexit is getting mortgages now. That is extremely difficult.
Well, it's funny. I was only talking to my UK bank yesterday, and I said, "Was there any chance of me being able to come back as a client?" And they said no. I said, well, because we don't have a financial passport we don't have a French office, so that's not going to happen. But in the meantime, there are banks that have set up expat banking, like HSBC and Lloyds have set up the specific expat banking for people who are Brits living in France who want to keep their home in the UK. And pay their bills in the UK, etc., because that was a nightmare after Brexit. Everybody, all the expats, the expats living away, had their bank accounts closed. Mortgages at the moment for expats, non-EU residents, because obviously Brits now are non-EU residents, is extremely complicated. French banks will not lend very easily unless you've got a substantial investment in that French bank. It's hard enough, let's be honest, right now for a Frenchman to borrow money.
Well, this is the problem. I know
the banks are not keen to lend to non-residents, full stop.
Well, the problem we've had as well when I've been speaking to clients at the shows is they've come up thinking that they could borrow 80,000 or 100,000. That's impossible now. You need to be, the minimum amount they will lend in any bank to a UK resident is 150 is the minimum amount. So I don't think people realise that. They think
I think when they're dealing with, I've spoken to quite a lot of the people in charge of like Habitat, in France, and they say the amount of work involved in dealing with a non-resident is that much that it's got to be profitable. That's why the bigger loans, absurdly, are easier to obtain than a small loan, because the cost in managing the dossier, the client, it's a lot more for the bank. And banks, as we know, are in the business to make money, and if they weren't making money, which they weren't, we've lost BNP Paribas International that disappeared. I think that will be coming back in another form from spring next year. So there will be loans available to non-resident Brits again.
We are still getting them. I mean, obviously, like areas like
obviously,
the Alps.
Brits that move here, when you're a resident, it's easier to borrow money because you're then French resident. And if you're a French resident, you're banking in France, then that's a much easier thing to do.
Although we have seen a lot of mortgages being granted in the Alps, for example, where the properties are higher value, so they're borrowing a lot more. Well,
because they're dealing with private banks, and private banks are a little bit more flexible. And also they'll ask the client to invest some money with them normally, so that then they've got a bit more security. I mean, the thing is, in France, in reality, it's extremely difficult to repossess a house, and it's a really long-winded procedure. So banks tend to be much more risk adverse anyway. And, basically the loan is not on the property. It never has been. The loan's always been on the person. So it's on the person's revenue. It's based on them and not the property, which I think is happening everywhere anyway now. I mean, the cost of borrowing here is still a lot cheaper than it is in the UK if you can get a mortgage. So, I mean, at the moment, we can get fixed for term for up to 25 years mortgages at just below 4%. I mean, at the time of this podcast, because we don't know what it will be next month. But, 4.5% fixed for term is still a pretty good deal. I mean, I took out my mortgage on my home. Right, it's probably 12 years ago, and I think I've got 3 years left to go. And it was 4%. I didn't bother renegotiating, and here we are back to 4%. And when I took it out, it was 4%. And really and truly, it hasn't been a game changer.
No, but unfortunately, it's gone up from the 1% that you could get fixed for term.
Well, I mean, that 1% was ridiculous. I mean, we were borrowing money at 0.5%. I mean, crikey. I think the cheapest one I got was fixed for 15 years at 0.8%, which is ridiculous. I mean, car loans were 1%, now they're 10, 11. I couldn't believe it. Somebody the other day said, oh, did you want finance on a new vehicle we wanted to buy? And they wanted 11.5%. Fine. They said, what? Are you mad? Anyway, I mean, the thing is the property is still very, very cheap in France. And the majority of our buyers at the moment are still buying either permanent homes, holiday homes. Permanent homes tend to be a little bit more expensive, but you can still buy a nice house in France for 150 grand. I mean, that is still, and a really nice house.
Well, it depends on where you are in the country as well, because obviously the prices vary. If you're looking sort of Brittany, Charente, Limousin areas, you'd be looking at 150.
In rural
France. In the Languedoc-Roussillon, the average house price is 180,000. If you were looking at the Côte d'Azur, it's going to be a lot more. You're going to be looking at probably 300,000. But the cheapest area in France, where you can get a 3-bedroom house, is actually the Creuse, and you can get houses there for 63,000 euros. Is the average house price in the Creuse. So if you're on a really small budget, that's the best area to buy in.
Well, we sold an awful lot in Limousin this year, and that's because the majority of the buyers have been cash buyers, and the budgets therefore have been less. We've sold almost as many homes as last year, which was a bumper year, because obviously the beginning of 22 was a roll on from 21 and all of that COVID boost that we had. But the number of transactions I've been surprised at. The number of properties we've sold, they've been for smaller amounts of money, but there's an awful lot of property being sold still.
Well, it's because it's such good value for money in the Limousin area.
Well, I was talking to Martin yesterday. Martin's got a couple of properties in Bulgaria, and he said what his homes were worth in Bulgaria. And I couldn't believe it. His houses are more expensive in Bulgaria than what rural France prices still are.
Well, I think that's the good thing about France. It's very stable. It doesn't really have the peaks and troughs like it does in the UK, where the market goes up and then it goes down.
Now, obviously, the affordability was greatly increased with mortgages at 1%. But the mortgage at 4%, then that, if you look at what the interest part payment is on a full repayment loan, because no one has interest only in France, everybody has a full repayment mortgage, everybody has fixed for term. If you had a fixed return mortgage at 1%, 4%, it equates to a drop in prices between 10 and 12%, which is where they're saying it's going to be in most places. We could see more in some areas where you had hyperinflation of property, cities like Bordeaux, Paris. We could see slightly more, but the demand is still there. It's just as strong. Finance is really hard to get hold of. The cost of finance has increased. Wages have gone up slightly, but not a lot. Really, there's been a wage inflation on average of about 4% across the country, because a lot of companies had to honour their inflation-related wage increases, and they haven't had to increase wages for an awful long time because inflation had been running at such a low rate. I mean, unfortunately, that's going to lead to unemployment as well, which is not going to help the property market either in the next couple of years. But luckily, the only thing that's keeping property where it is right now is the lack of supply. And there still is a problem with the supply.
The other interesting thing which I found with the French is they don't like to commute like the Brits do. Like when I worked in London, I travel an hour and a half to get into work. That's what it would take me in the car.
It took me 2 hours and 45 minutes to get from Guildford to central London.
Yeah, it's ridiculous.
On Thursday.
But the French tend to only do a commute of half an hour, and that means that they are around the city. So if you come slightly out of half an hour outside of the city, the property prices drop.
Yeah.
So it's a lot cheaper to buy without, not being in that half an hour band from a city. And that's where you can get some really good value for money.
But then again, if you look at what it costs them in fuel to get there, it needs to be cheaper because, fuel prices are quite expensive. I mean, a lot of rural parts of France, there's no rail access. There's no other way to get there than in your car. And, running your car backwards and forwards, 20 minutes to work, 20 minutes is okay. But the minute you've got to do an hour in the car to get to work and an hour back again, you're going to be spending an extra 300 euros a month on petrol. And if you're doing that and you're only earning 1,800 euros, the average wage in the countryside is about 1,800 euros take home.
I was talking more really for Brits that want to move over or have a holiday home. If they look at that, the French
if they go
further out,
right,
yeah, they're going to have a really good value for money property because the French will tend to buy just.
Well, they can't afford to be that far away because the cost of fuel, it's ridiculous. So anyway, the market in general for British clients, I'd say at the moment is pretty buoyant. The pound is pretty good. For a cash buyer at the moment, now we've had the COVID panic is over and everybody doesn't want to move to the countryside. It's a bloody good time to buy, I think. You can get a really good deal at a fairly strong pound. If you're a cash buyer, it's as good a time as any to buy in the last 20 years, really.
The only thing I would suggest if you are a cash buyer is bearing in mind that the sale could take 3 to 4 months to go through is to fix your currency rate, because if the pound goes up or down, you could lose out if it goes down.
You could do, but it's been fairly steady, isn't it? I mean, for the moment, there's been no massive fluctuations for a while, thank God. I think we're going to stay at around this 115 to 120. It's where it belongs anyway. Yeah, so anyway, I think that sums that up. I mean, frankly, there's nothing to worry about. Procedure's slightly more complicated, or quite a bit more complicated, but it's doable. Prices are stable. If anything, you can have a fab deal at the moment. So there you go. Hope that gave you some useful information, and see you next time.